Welcome to Market Call. I'm Marella Fernandez. Keith Richards with us on the show today. He's president and chief portfolio manager at ValueTrend Wealth Management. He's going to take your questions on technical analysis. Here's how to reach us. Call us toll free, 1-855-326-6266. You can email your questions as well, marketcall@bnnbloomberg.ca. Keith, good to see you. Thanks for coming in today.
Great to be here as always.
Let's talk about stock versus bond, because I know that's on your radar today. What are you noticing?
Yeah, it's actually been on my radar for many moons now, because it's been a divergence. Now, what's interesting is, since I wrote that commentary for you guys a week ago, we're starting to see what I'm going to talk about right now, the jaws close. So one of the things we want to watch is how bond yields and stock prices are acting. And typically, rising bond yields and rising stock prices don't go together. Now, it's a loose relationship. They're not absolutely correlated, but generally you want more or less declining or soft rates that help stocks. So what we've seen, if we reverse the yield on stocks is going down, or is equivalent, or going up, I should say, is equivalent to the price on bonds going down. Okay?
Yep.
So what we look for is, more or less, if you track something like, I'll maybe get a TLT chart, which is the 20-year U.S. bond. If you look at the price of TLT or any of the bond ETFs, that should be roughly going up at the same time as the S&P is roughly going up. They're not perfectly in lockstep, but what we've seen is there's a differential. TLT has been going down in price, meaning yields have been high, and the S&P was going up. So this is a divergence that over time will change. So if we look at, so this is, okay, so if, I don't know if we can overlay the price of S&P 500, but if we were to look at this chart, and we would see that the S&P kind of was following the yield, the TLT pricing more or less over the past decade plus, but then they begin to separate right in the 2024 era.
Okay.
And so you sort of like the TLT, I should actually be clearing that. The TLT went down and the S&P was going up, and I call this jaws. It looks like an alligator because this is the gaping mouth of the alligator, and eventually they have to close. Okay, the jaws of the alligator have to close because the two of them over time are typically correlated, and you don't find long-term bond prices going down and stock prices going up. It's not a relationship.
When was the last time you saw something like that?
Actually, that's a good question, because I should go back and look at it. I have seen it in, if I recall correctly, in the mid-1990s. There was a pretty big discrepancy between the price. I remember around 94 and whatnot. There was a big discrepancy. There was a big bond crash back then. So that was a difference, and you saw the stock. The stocks moved down after that. So generally speaking, it's a healthy market to have the two move in sync. The funny thing is, though, that if we look at the past, this is why I'm not recalling a lot of instances, if you look at the past, say, 20 years, the Fed in the U.S. has been very accommodative, right? So you haven't seen a lot of these alligator formations, but it's not a relationship that can last forever.
Got it. Okay, we're going to take a quick break, line up some phone calls for Keith Richards of ValueTrend Wealth. We're back in a moment. Welcome back, and thanks for joining us on Market Call. Keith Richards is here as our guest doing technical analysis. Let's go to our first person on the phone. Stan is calling with a question. Hi, Stan. Stan, are you there? Okay, it looks like we do not have Stan. Let's go to an email from Anne. Anne says, can I have Keith's opinion on Constellation Software as well as marketplace or market analysis, excuse me. So that is Constellation Software, the question coming from Anne today.
Okay, so Constellation Software, uptrend, pretty hard to argue with that. For those who've don't follow me regularly on this show or my blogs and whatnot, just the definition of an uptrend is higher highs and higher lows. So if you look at this chart, that's what you've got. So there's, peak, trough, and what you want to see in very basic terms is a continuous pattern of higher highs and higher lows. Now, what you sometimes get is what we're getting on Constellation right now, which is, oops, I'm going to clear the screen. You can see that the most recent high has been stalling at the early this year high, probably around January, February. That's okay because we call those consolidation patterns, and they're normal. After a good long rise, you get a bit of consolidation. What I might think is that so long as we break this, so I look for breakouts. So if we break this to the upside, that's actually extremely bullish because you're probably in for another run. At this point, if you own the stock, continue to own it. If you don't own it, you have to sort of keep an eye that it doesn't fail the last low, okay? So you could try to buy probably closer to the last low, but just be cautious that if it doesn't break out, it may not be good.
And when you say the consolidation period for where it's going now, what do you actually mean? What does that mean for the stock?
Okay, so whenever you get a stock, enthusiastic investors buy, and that creates an uptrend. There's good news, maybe fundamental news, and then eventually, it kind of starts to reach maximum speed,
Taper
you could
off,
say,
sure,
right? So a healthy stock and a healthy market, if you look at the S&P right now, it's been more or less stuck below 6,000 for a while, right? So that's not a bad thing, though. It just means it's taking a break, and so long as it ends up moving higher later, it's good. So consolidation just means it's washing out some of the excess, like letting earnings catch up to the price, so to speak, if you talk about PE ratios and stuff like that. So I don't view them as negative. I just view them as consolidations, healthy.
Got it. Okay, let's go back to another email. This one's from Charlie. He says, I would like your technical take on Brookfield Asset Management. Brookfield Asset Management.
Bam, bam. Okay, the old Flintstone show. So this case, we have, again, going back to our good old-fashioned technical analysis 101, there's the last low, there's the last peak. This low is lower, this peak appears to be lower. So right now we have the makings of a potential, not an absolute, but a potential downtrend. So I'd be a little cautious on this one. I don't think I'd probably watch it if I didn't own it, and I'd like it to turn around.
You're looking at a 3-year chart here. When do you look further back? At what point do you want to look further back?
Well, I start in reverse. So I look at the big picture first, usually 5-6 years. I don't go too far back when I'm buying individual stocks, but I'll look at the longer term picture and I say, oh, there's an uptrend, I like that. Then I'll look at the 1 or 2 year chart, 3-year chart, and I'll look at the patterns like we just looked at with Brookfield, right? And if I see that, okay, in the near term, it's kind of pulling back, or on the previous stock consolidating, then I can make different decisions to whether I want to enter right now, even if the longer term view is good.
Got it. Okay, so let's go back to another email. This is from Bill, and Bill says he would like to have your technical analysis on Visa. Okay, so let's have a look at Visa.
Visa, yeah. So here's another stock, and by the way, a lot of these stocks we're seeing that are consolidating, that's because the S&P's been consolidating. The S&P's, like I said, has been stuck below the 6,061, whatever it is, 6,150 high, and that's what we're seeing on Visa. So nothing wrong with that. Consolidations are healthy for stocks, and so long as they don't break down. So you don't want to see, again, going back to our last low, you really don't want to see that break, then you maybe have a problem. But right now, Visa looks fine. It's just in a consolidation pattern. Just watch it doesn't break the last low.
Got it. We're going to take a quick break. We're going to be back with Keith Richards in just a moment. Stay tuned.
No.
Welcome back to Market Call. Thanks again for joining us. Let's go back to an email from Mary Lou. She says, could I please have Keith's analysis of Bitcoin? Is Bitcoin one of those ones that you can do analysis on?
And then be wrong 3 minutes later?
I don't know. It's such a volatile stock, and the highs and lows were so high and so low.
Yeah.
What do you do with a trend like that?
Well, it's interesting. I do blogs a lot. Like, I've been writing these blogs for 20 years, and fairly big following. And I started doing videos semi-seriously about a year ago. And I covered Bitcoin a couple times. So you could look at my videos on Bitcoin, there's a relationship between gold and Bitcoin that I follow very closely. It's probably one of the best predictive models. So they're dance partners, and they trade who's going to be the lead dance partner, right? So gold will outperform Bitcoin, then Bitcoin will outperform gold, back and forth. And there's a history. In fact, if you look at some of my blogs and my videos, you'll see that long-term history.
I was going to say, how long-term is it? Yeah.
Bitcoin's been sort of around and traded. It's past few years, right? Okay. So right now, Bitcoin's, you can see gold's been softening, just even today, but it's actually been a couple weeks. It's just pulling back a little bit. Nothing wrong with that. But Bitcoin's the dance partner that's taking over right now. And that may last a while. You may get a month of Bitcoin outperforming, and then gold's going to step in and say, I'll take lead right now. So Bitcoin, for the time being, looks great. I mean, it's just broken its last high, right? How do you argue with that as a technical person? I think it'll go higher until it doesn't. until you probably see a revival in strength on gold, and that'll be your signal.
Has the growth for Bitcoin slowed down over the past, let's say, 6 months to a year?
I wouldn't think so.
Okay.
No, I mean, in fact, you saw it hit the 100,000, and now it's at what, a 105 or so right now. I mean, no, I think Bitcoin's becoming more and more predominant in the markets.
Got it. Okay, let's go to the phone lines, and we have Terry on the line. He's calling from Edmonton today. Hi, Terry.
Good day. My question's on Whitecap Resources and oil and gas in general. So during Trump 1.0, I think he kept the price of oil and gas down. Now in Trump 2.0, I think he's collaborated with the Saudis to keep prices of oil low. So I don't know how these oil and gas stocks are going to make out in the future. Thank you very much.
Okay, so because Donald Trump has such a heavy hand in some of these situations, does it affect the way the charts change? I'm wondering if the last 6 months and the patterns over the last 6 months coincide with any other patterns you've seen historically.
Well, I can tell you this, that like gold, oil, things like that are commodities in general, but especially these are the big ones, right? The ones that are traded very, copper, that's a big one, right? These are worldwide traded commodities, right? So when you have a big audience, yes, like big global decisions by the most powerful country in the world can make a difference, and by the big producers like Saudi Arabia and whatnot. Look what happened with Iran the other day, and now they seem to be coming. They say there's sort of peace right now, maybe kind of
peace for 5 minutes
for
and
the
then
next
there's
10
not,
minutes.
yes.
Yeah. So macro stuff matters with that. We actually at ValueTrend we sold some last of our oil stocks. And we've been really focusing on gassy stocks. Like it's hard to get pure gas stocks, but there's some stocks. And we like Canadian oil and gas stocks, especially the gassy stocks right now. Why? Because finally, after 9 years of no pipelines and all that, we're going to probably, Prime Minister Carney, I mean, he's open to it. And I mean, he wrote that book saying he doesn't like oil, but then he's saying he's open to it, which is meaning he's a common sense. I'm usually very critical, but he's opening the door.
I think his idea is I act for the people.
Yeah.
And even though I believe this, if this is what the people want, and it does seem to be what people want now, that they didn't 10 years ago, that changes things.
I think we're in a corner, right?
Yeah,
we have to, now that the U.S. is kind of backing away from oil and gas,
we
need
have
to sell it
in.
overseas. And what's the best thing to sell is gas, right? Craig and I did a video, my associate Craig, he's a CFA, on it was called Day in a Life of Portfolio Managers, and we talked about why we like nat gas and have written a lot about it. So we think for a long period of time, gassy stocks are the better way to go. Now, the caller's asking about
Whitecap. Let's have a look at Whitecap.
Let's take a look at that. So Whitecap, correct me if I'm wrong, but I believe that's a little bit more oily. Craig
Let me double check.
Craig fills me in on this stuff. I'm just the mere technical guy.
I'm just.
Just based on the fact of its pattern, I would suggest that it might be a little bit more oily. So there was a trading range with Whitecap, and so the idea, like, I do a lot of swing trading. So, and we've talked about this,
yes.
You've heard me talk about it enough. I like buying within patterns. So you can buy on the low part of the pattern, you sell on the top part. Whitecap broke down. And so now it's struggling just to get back to the old support level that's becoming what we call new resistance. So Whitecap, to me, if I were to look at this stock, I would only buy it if it definitively takes out, it looks like it's trying to take out that last low of early 24. But I'd want to see some definitive evidence. And as I said, if it's kind of overly oily, and what did you?
It just says oil and natural gas.
That's it depends.
It's a combination.
Yeah, it's a combination.
But I wanted to ask you here: the resistance level here is what about? I can't tell if that's a 9
it's
or
hard
an
to
8,
see. It's maybe 8.5.
So what would you wait for it to get to satisfy you that it's broken out from that trend?
So it looks like it's 9, and it does look like it's kind of
moved past it.
But
would you wait a little bit more?
So yeah, we usually like something like this that broke down so hard. We'd want to wait a good couple of weeks. Like,
oh wow!
You know,
okay.
there's rules, and we're very quantitative with the way we do things at ValueTrend. But at the same time, 35 years of doing this, and there's a little bit of spider sense.
No, because I'm sure people are like, okay, let's wait till it gets past that point of resistance. Okay, it's past it, and they want to move in because they've been watching it so closely. But what you're saying is, let it move past and let it stay past.
We use a rule called the rule of 3, but that's 3 days minimum to 3 weeks maximum. That's a pretty big range I've got to play with before I enter a stock.
Got it.
So
okay, good to know. All right, let's go back to the phone lines. John's on the line from London with a question. Hi, John.
Hi, Marilla. Hello, Keith. Thank you for your analysis. I bought Celestica at about 48 and then added at 70, added at 134, and brought a family member in at that point. It's at about 196 now, and the chart looks really good. What is the chart telling me that I shouldn't add at this point? Thanks very much, Keith.
Okay, so interesting chart here. Of course, the big deep dive in April climbed back steady almost to its last high.
Yeah. Again, what was the last high? Because it actually looks right now like it's ahead.
I have
this
in
chart
here as 143-ish.
No, it looks like the last high was more, well, okay, we're going back to like very beginning of the year or a December 24 sort of thing. It looks to me like the last high was around, am I right in saying maybe 180? I haven't looked at the stock recently.
So how do you read that? They're at
like the last
194 today.
So 194, and the early peak in 25, early January 25, late 24. Looks to me it was 170, 180, something like that. Sorry, these charts are a little hard to read when you're looking at them from a longer period. But let's say it looks to me like the old high has been taken out. And as a technical guy, I like that, okay? Now, when you have an advance that's as strong as that, like it literally climbed from the low 100s to 200 almost, that's a big move. So we call that kind of a parabolic move. You can almost count on a short-term pullback, okay? So that pullback, so long as it does not break the old high, the early 25, late 24 high, whatever that is, 180 or whatever, long as that is going to hold, I would be all over this stock. It actually, that's a very positive thing that it broke out.
And he's saying you would still invest in it because he clearly has been investing, and would you dig in a little bit more?
Yeah, I would probably think that with the recent rally, it may pull back a bit. So if you've loaded up a bit, maybe take a wait and see if it pulls back. But if it doesn't pull back, just, you could step in, because breakouts are breakouts, and that's always good news.
Got it. Okay, let's go back to the phone lines. Joseph's on the line. Today he's calling from Montreal. Hi, Joseph.
Hi, everyone. Thanks for taking my call. Keith, want to hear what you have to say about Kamico. This thing just is on the roller coaster ride up and up. Probably the only thing working against it is the RSI. It's in for a few weeks there, it looks like it's in overbought territory, or a few days anyway. So I want to get your opinion on Kamico. Should we keep riding the rocket up, or I don't know if you can even predict this, but if we expect a pullback, to what point? Or do other uranium names look attractive right now? Thanks in advance.
Okay, thanks for the question.
Okay, so full disclosure, we own Kamico in both our regular equity platform and our aggressive platform. Now, funny, I was just talking about that video that Craig and I did called A Day in a Life, and I encourage people to go to YouTube to see it, because we actually, on that video, we were making a live decision. It was actually, the decision was done a couple of days before we actually recorded the video, where we sold we kept half of our Kamico, because at that point, it was playing with its old high. I think we sold it around the mid 90s. Okay. And well, here it is, $100. So, $98, right?
Yeah.
But we sold because of what old resistance, and we were overloaded in it. Like we had it, and it went up like crazy, and we bought it near we like swing trades, so we bought it near the bottom of the pattern that I've talked about a million times in this show. So our target was here. So we said, it could break out, so let's sell half. And of course, it did break out. I would agree that based on, you're talking about RSI and that kind of thing, it's way overbought. And it's funny because, we sometimes get new money come in, new clients, whatever. And it's like the only stock that I haven't bought for our new clients is this, because I just think it's gone ballistically too fast, even though we own it. We like the stock, but I think it's going to pull back. That's just an opinion based on momentum indicators. They're overbought. It almost always happens. So we're waiting. I would wait to buy more is what I'm saying. I don't think it's a disaster, though, because it did break its old high. So you'll probably just see a retracement, maybe just slightly above its old high.
Got it. All right.
Yeah.
We're going to take another quick break, line up some more phone calls and emails for Keith. We're back in a moment. Welcome back. Time now to go through Keith Richards' past picks from May 22nd of this year, so just a month ago. At the time, he chose BMO's India Equity Index ETF at 49.66. We haven't given you a lot of time for some run-up here for the stock to do much, but it is up to 50.20, so 1% upside in return and total return. Are you holding on to or investing more in India generally?
Yeah, we've done a second leg. So for viewers who have followed me for a while, we're fairly mobile with our stocks. So I usually get BNN to just do 1 or 2 months between my picks, because sometimes I'll sell them within a month or two. So the India ETF, long-term uptrend, it was broken. It fell, and then it did you don't see it on this chart so much, but it did a little bit of a base, and then it looks like it's breaking out. So we think that it'll return to its old high eventually. So we've been legging in. So we did one leg on initial breakout, a second leg just recently, and we'll do one more leg eventually if the stock keeps moving up.
What made you interested in this particular ETF?
Well, a developing nation that is doing very well, and one of the countries that actually is going to be less. Nobody's not affected by tariffs, but less so. And so fundamentally, Craig likes the economy, and I like the chart. So we're legging in slowly. We think it's a bit of a longer term play, but we like it.
Got it. Okay, let's go to your next past pick from a month ago, which was Nutrien, which was running up a little bit at one point. It's 81.66 when you recommended it. It's up to 82.03, so up under 1% for return and total return. Nutrien, tell me the story here, because initially there was concern that it was just flat and it wasn't doing anything. It started creeping up more recently.
Yeah.
What do you see here?
Well, again, we have a little bit of a, I hate being saying thematic, because thematic investors always get crushed.
Okay.
But you don't follow the theme, you follow the charts. But there is one macro tendency that I can see a shift on a very long-term scale, that markets are beginning to reward commodities really since like 2021 or so, over the past 4 years, and it's a long-term cycle. It's a cycle that can last 10, 15 years, okay? The commodities should, over the next number of years, begin to outperform financial assets. We've seen gold, okay? We have yet to see the base metals, but we are seeing, uranium, some of the other precious metals and whatnot. What do they call them? Rare earths, stuff like that. So we like a lot of commodities, and potash is a commodity that we like. So, you saw it was the dog's breakfast for a while, and then it based a long time, and it's starting to break out. So, yeah, a month ago we started buying it, and I think, have we done 2 legs? I'm not sure if we've done 2 legs into it yet. We do 2% legs, so usually in 3 increments, right? So we at least, in my head, I don't remember if I've done 2 legs yet, but I've got
not, you're
at least,
close to it.
Yeah, we're close to it. We've got at least no, we do have a 2% in this. Plus, we bought 2% in another potash stock.
Got it.
So yeah, we like the sector again because of the formation and because it's commodity oriented.
Got it. Okay, let's get to your last pick from May. ACON on the TSX. At the time, it was 1904. It's gone up to 1970 in a month, so 3% upside. Total return of 4%. And what are you liking about ACON? And are you still in it?
Oh yeah,
Okay.
yeah. And I believe we've done 2 legs in that stock. We really like this one because it's again, you have to look at the short-term chart. But if you know my style, I love stuff that has fallen and made a base and is breaking out. And this isn't, you can't really see that on this chart, but you can certainly see that it fell.
Yeah,
and
that's a deep dive.
Yeah, that's a deep dive. And so we don't want to buy stocks that are declining, but if we start to see some sort of a revival, which we have, we've done 1 leg only, 2% position in ACON, and bought on the breakout. You can see we've made 2 or 3% or whatever it is over the past month. But we think there's tons of upside, especially with the arguably, oversized budget that Canada's got right now, that they're going to put some money into infrastructure, and that will be good for these guys.
What was the high before the fall off? Can you sort of read that?
I think it's around $30.
Around 30, okay.
So, could it get back to the highs? Sure, so long as, the force is with us, as they said on Star Wars. I think there's a good chance. And because of that little mini breakout, we've got 1 leg only. Like, we're not piling in just yet, but we like to buy in steps, and we'll keep stepping in so long as it cooperates.
Got it. Okay, we're going to take another break. We'll line up your phone calls for Keith when we come back. Stay tuned. Welcome back to Market Call. We're going right to the phone lines. Amin is on the line holding for Markham, Ontario. Hi, Amin.
Hi. Hello. Hi, Keith. Thank you for your blogs and for your YouTube videos. Enjoy watching them. What are your thoughts on Teck Resources? Thank you.
Okay, let's have a look at Teck Resources, mining company, all sorts of different metals that they are involved in. And it has been on a downward slide and just broke out, I guess, earlier this year.
Yeah, I mean, I like metals in general. We actually held a whole bunch, sold them, and are starting to leg back in again. We don't own Teck. Teck is like an ETF of metals because they got a little bit.
Is there a metal you like more specifically?
Well, you can't argue with what copper's done recently. And of course, we love the precious metals and some of the other commodities we like. But we did buy, I won't disclose it right now, but we did buy 1 base metal manufacturer, producer in the States, in the U.S. Side. But we're stepping in gingerly. The good thing about Teck right now is there's a pretty long-term support going back to 23, late 23, early 23, and then recently 25 that it's bounced off of. So that's a good thing. To me right now, it looks like a swing trade, and that's really even copper is kind of coming into that top point. So you may get. There's no predictions. You can't predict on the market, but you can give projections. You may get that $60-ish area on the stock before it runs out of juice. It might even have to stop here, which is maybe closer to the high 50s or something. But it looks, for now, pretty positive. You definitely want to keep your finger on the trigger, though, because if it starts to fail, as you can see what happens, it likes to fail at certain spots and fall. So just be careful. But it's right now the force is with you. The market's trading in your way.
Got it. Okay, let's go on to Wayne, who's calling today from London, Ontario. Hi, Wayne.
Hi, how are you?
Good. What's your question today?
My question's on Kushar. I've noticed since about mid-February, it'd be at about $74, and then slowly dropped down to about $68. Now it's hit $74 probably about 4 or 5 times, and of course now it's sitting at $70.50. Just wanted to know what your thoughts are going forward, and do you own the stock? And what do you do with it?
Okay, so we did own it. And this is, look, the thing about the market is that you have some good calls and some bad calls, but the idea is that you want to have more good than bad.
Sure.
So alimentation was one of our good calls. It really bothers me when someone only talks about their good calls, but this is one of my good calls. It was in an uptrend, it based out, and it failed. Okay, so we literally sold this stock late 24, and I'm, even though it rebounded, obviously, I'm glad we did, because now the problem with Kushar is that it is failing. It took out this low, which was a lower low than here, lower highs, lower lows. I don't like the look of this chart. I can't. As a technical person, I don't like the look of the chart. So I would, on any sign of rally, if you're in the stock, I would probably sell it based on my discipline. Again, everybody has their own way of looking. If you're a fundamental person and you really believe in the guts of the company, that it's a good, well-run company, then own it. But I could not own this stock right now.
Got it. Okay. Wayne, I hope that helps you out. Let's move on to Bob, who's calling today from Burlington, Ontario. Hi, Bob.
Hi, Marilla. Hi, Keith. Keith, I wanted to ask about ETF evaluation. Do you use different technical indicators when evaluating major market ETFs, which has a lot of different stocks in them, compared to individual stocks? And if so, what indicators would you favor to analyze ETFs?
Okay.
Thanks for the question. It's funny because I had asked somebody recently a similar question. If an ETF is made up of X number of stocks, do you look at each stock individually to determine whether you like that ETF, or how do you decide that that's the one for you?
So if we have an hour and a half left in the show, then I could probably go through my entire system. But roughly, okay. Well, here's the Cole's notes on it. Read my book Sideways. It's like $15 on Amazon, so it's probably worth your $15. And if you want more, go to my course, my online course, which is on my website. But in a nutshell, macro, so if we're looking at broad market ETF, that means the S&P 500, like SPY.
Okay, as opposed to sector specific.
Yeah, and so then sectors are different. So, gosh, I've got 5 minutes to talk about this, or less. Broad market stuff, we use a combination of the trend stuff that I'm always talking about on this show. Higher highs, higher lows, look at the 200-day, look at the 50-day moving average. But we also look at sentiment and breadth, okay? So read my books.
Sentiment as defined by?
Sentiment is crowd behavior, okay? So smart money versus dumb money. I wrote a book called Smart Money, Dumb Money too. So you can, there's a lot packed into this answer, but we do sentiment, and then we finally look at market breadth, which is market participation. If you've only got remember last year, 24, it was 7 stocks doing all the lifting.
Yes.
Well, ultimately, the market did fail, okay? Now it's rebounding right now, but that was the reason why. It was just a few stocks going up. So you need all those 3 elements. Now, sector stocks different. We look at rotation, and again, all of this stuff is described in my online course and stuff, but I talk about it in my videos too. You can go in my videos. So rotation in strength happens regularly. So we do a 30-day model. We look at 30 days versus the previous 30 days, and we go, oh look, this was a dog stock 60 days ago, but now it's a dog sector, I should say. Now it's coming up. So we're starting to see money rotate, and then we look at other technicals to see that's a sector we want to buy. And so that's, gosh, there's a long answer, but hopefully that helps.
Gives some information. Okay, let's get in one last caller in before we take a break. Moaz is calling from Vancouver. Hi, Moaz.
Hi, Mirella. Thank you for taking my call. My question is on Broadcom, FGO. I would like to limit my exposure to technology. So I have to decide between holding or selling some of my FGO or NVIDIA.
Okay, so Broadcom is what you're interested in getting into. Let's pull up the Broadcom here at $262.39 today, up $8 just today, 3 and almost 0.5%.
I think he was actually saying he owns both of NVIDIA
and he's
Broadcom,
trying to decide which one. Got it.
If he's going to sell one, right? So they're both kind of making new highs. So it's almost like choose your weapon. It's breaking out to a new high, and as a technical person, you can't argue with that. As a technical person, I would say, your intuition, Moaz, is correct. That it's probably overbought. It probably will pull back to somewhere near, not necessarily to, the last peak. That would become a support level. So what I would, it's really hard to say though that, yeah, you should sell this one right now.
Sure.
But it's likely that one or both of those stocks will peel back a little bit just because they're probably overbought. And the last caller was asking what I look at with sectors and stuff. I do look at the technical indicators like momentum indicators to give me that intuitive.
Got it. Okay, we are going to take a quick break. We're going to be back with more of your phone calls in just a moment. Stay tuned. Join us next week. Tomorrow, not next week. Brian Madden will be on the show, Chief Investment Officer, First Avenue Investment Council. He'll take your questions on North American equities. And if you missed a show, you can find us on our podcast, iHeartRadio, and other platforms. So just tune in to our podcast if you end up missing a show. Back in a moment. All right, let's go to the phone lines. We have more questions lined up for Keith. Jerry is on the line from Vancouver. Hi, Jerry.
Hi. Marilla, if I can make a quick suggestion, if you guys can show the current dividend on stocks that are being paid when you show a chart, I think that would be helpful. Keith, my question is on Blackstone. Your thoughts, please. Thank you.
Okay, let's have a look at Blackstone. And what is your take on Blackstone?
Okay, I see Jerry lives in North Vancouver. My brother used to live there, and I used to visit him. Great place. Jerry's going to hate me for this because it's not an easy answer. We had this on our watch list, and then we took it off because it kind of peaked and then troughed and made a lower high, and we said, okay, this is no longer a stock we want to watch. One could look at a really long trend and say, yeah, maybe it's bouncing off of that. So, and maybe it is. So I'm going to give this a 5 out of 10. It could go either way. Jerry, you probably hate me for this, but I'm sorry. Like, this is one of those ones that...
Ask again tomorrow.
Yeah, why don't you call me in a month?
Yeah. Okay, so it's just not really clear.
Yeah.
Got it. Okay, let's go back to the phone lines. And now Lawrence is on the line. He's holding from London, Ontario. Hi, Lawrence.
Good afternoon, and thank you for your books. It's always an enjoyable read. I'm wondering what's your opinion on if I should buy more EIF?
Okay. Yeah, I sometimes get asked if I'm going to write more books. I've written 3 books. I don't know.
Tired.
If you ever
tired.
write a book, it's like it's
a commitment.
It's a labor of love.
Yeah, it's a commitment.
You don't become financially wealthy by writing books. Let's put it that way. It's more for fun. Exchange Income Corp does seem to be breaking its last high. It is. Need I say this? This is one volatile stock.
Yeah, it really is.
Woohoo. If you like roller coasters, this one's for you. It is breaking out, so there's a good potential that it'll carry on. But it's that recent move is a little bit steep, so it might pull back. And that's I use this rule I mentioned earlier in the show, 3 days to 3 weeks. If I see a breakout, I wait. That's a big scope, but I will wait a little bit of time to make sure that this breakout is real. If it lasts for a while, then I actually would buy in.
Do you see any timeline trend? Is it sort of shooting up at certain points in that cycle, or not? Is it just all over the place?
You can count. I won't sit here and bore you while the viewers wait patiently, but you can actually do cycle analysis. You always measure cycles. See, we can get into all kinds of topics, right? From trough to trough. Okay, so those would be your troughs. And then you just average them and see if you can go back far enough to see if there's a pattern of that kind of trough to trough average. I'm not going to do that today.
Okay, no.
But yeah, you could. Absolutely. That was a great question. Thank you.
Okay,
yeah.
Let's go to our next caller. Matt's on the line today from BC. Hi, Matt.
Hi, Merrill. Keith, I always appreciate you very much. Quick question about Propel Holdings. I bought in a big chunk at about $26. I feel like it just broke past the resistance line, and I really want to add another chunk. I would like to listen to your opinion. Thank you.
Okay, so let's have a look at Propel Holdings.
Okay, so I can, and in fact, this is the one time I'm going to maybe ask for a 1 or 2 year chart, like maybe a 1 year chart, because we're talking about this is being the last high, which is 40. It's hard on this chart to say that it's broken the last high, but that's because maybe I'm not able to see the exact price level, but I would want to see if it's 40, if that last high was 40 in the end of 24, I wouldn't want to see that broken. Again, remember my 3 days to 3 weeks rule. So good. This is, here we are. So there's the last high. And now this was a momentary high, but I look for clusters. So it kind of seems to be coming in, right around 40 bucks.
I think it's 42.
Well, 42 was maybe that peaky moment back in February. But the bigger cluster is 40. So, it's still not through that. You're at 36 almost 37, right? I would want to see that break out because you're so close to that high that it could just find a reason to fail and go down. There's no predictions. There's just always probabilities. Whenever you trade, you're not working with absolutes. You're working with probabilities.
So at this point, you would suggest that he not put more money in, maybe just wait a little while to see whether it turns a corner or not, which way it turns?
Believe it or not, it's better to buy higher. Isn't that funny? Because we're taught to buy low, sell high, and we do want to do that. But the problem is you could see it fail right at that 40-ish area and then make your day
and
back.
Lose some money. Yeah. Absolutely. Okay. We are going to take a quick break. We're going to come back with new picks from Keith. Back in a moment. All right, time now for top picks, new ones from Keith Richards. His first choice is ARC Resources, so natural gas output on the TSX. What do you like? We talked a little bit about natural gas earlier on. You're liking this part of this energy sector.
Yeah, and again, I steer you back to that YouTube where we call it Day in a Life, because Craig's a fundamental guy, he's a CFA. So he talked about the different types of nat gas producers. Everybody should understand this stuff before saying, I'm going to buy an oil and gas stock. You should understand the different aspects of each company. And we're trying, because we believe that nat gas will go up in price. We believe that Europe's going to buy nat gas off of Canada eventually, whenever we can get the pipeline out to the West Coast, hopefully. So with all that in mind, it's a long-term play, and ARC is involved in the, sorry, this is Craig's terminology, and I'm already gapping on it because I'm just the technical guy. But it's the initial pull it out of the ground people, and then there's the refining people, and then there's the send it down the tube people. Those are the three. I'm mocking what Craig said.
Okay.
So ARC is, we're mostly involved in the early stage, suck it out of the ground people stage, right? All of our gas companies that we own. And ARC is the premier one. So if you wanted to pick the darling of the group, this is our fave. And we've owned this for a while. This is not a new pick for us. So it's been great. We've had it for 2 or 3 years. It's made lots of money for us. Just broke out again. And it just does that. It breaks out, it pulls back, but we think that this, we're regularly not long-term investors, as you know, but this one, we have faith that it's going to be good for a couple of years anyways.
Okay. And natural gas, of course, as we mentioned, there seems to be a push from the government now to support forward energy projects.
Out of necessity, because we can't sell enough maple syrup to make up for what we're losing.
And nothing is going to the U.S.
through tariffs.
Let's go to your next pick, which is Global X Silver Miners ETF. Why are you liking silver at this point?
Well, we've liked silver. Okay, so here's the bigger picture. We've liked gold before anybody else did when it broke out 2 years ago. We bought lots and lots of gold. It's gone up a lot. We started selling gold. We still hold some. I can't recall the exact percentage, but it's probably less than 10% gold now. But what did we move into? Silver. Why? Because silver needed some catching up. And in fact, it's still got lots of catching up to do. If you look at the price of gold versus the price of silver, there's a huge gap. You could also, if you look at the price of gold producers versus silver producers, equally huge gap. There's catch up. The relationship is going to close between those two. And we think in silver's favor. And in fact, since we started buying silver about 6-8 months ago, the relationship has been closing. Silver's been out producing gold in the past couple months.
And why do you like this specific ETF?
Well, it's a silver miners ETF, and so I mean, this is a short-term chart. Sorry, but breakout up. It's up is good, down is bad.
Okay, let's get to your last pick then, which is cash, which I was laughing at, but it's literally CASH.
Yeah.
And why do you like? You have to explain what it is first.
Okay. Well, cash is an ETF that it's run by Global X. It used to be Horizons, if anybody remembers. It used to be Horizons that kind of created this thing. And the ticker is CASH, which you gotta love, on Toronto. And all it does is it buys what do you call them, high interest savings accounts. And he just buys a bunch of them. And then you get the average yield of the group of whatever number of high interest savings accounts. The reason we like it at ValueTrend is because we can't buy high interest savings accounts for a 200, like our ValueTrend equity platform is 200 million, and so we have like big pools, and we can't buy huge amounts of anything. The T-bills can sometimes fluctuate, so this thing is actually pretty predictable. You just buy it. We can sell it in little wee pieces if we want to buy a new stock. So yeah, we hold a good chunk of that right now because of all the different factors, the uncertainty and stuff out there.
Okay, and very quickly, because we have about a minute left, moving forward, is there anything else you're watching sector-wise?
Okay, so, well, we talked a bit about the metals, and I'm just legging in. So that's kind of a early trade for us right now. So I've talked a lot about commodities, and everybody's so fixated on gold right now, which is great, but I mean, you got to look at other stuff because gold, we still hold gold, but like I said, we moved some of our gold out and bought silver. Everybody's fixated on uranium right now because it's gone like crazy. It'll probably pull back, and then so you need to be. That's why I do this sector rotation model. So I'm just suggesting look at things like potash that we talked about earlier in the show. Other commodities, rare earth, whatever. So
Keith Richards, got to leave it there. So thanks for joining us, and thanks for joining us on Market Call. We'll see you again tomorrow.